let's talk products. Y'all cool with that?
Yeah.
I really do love products.
I know.
I think I know way too many, to be honest with you.
One thing I'll say before we move on though is I know I think we had new people on, but like submitting the app or knowing how to get to the e-application, because most of the e-apps we do, like you don't need to know it, just call one of us and we'll walk you through it until you have the hang of it.
Yeah.
I just want to make note of that. Like once you,
And each carrier now has an e-app, right?
pretty
Yep.
much everybody, yeah.
Everybody has an e-app these days.
Most of the carriers, a lot of them.
Remember
even
when we
have
walked into
paper app.
homes with like a stack of paper applications and we had to put together application packets, and before we even went into a home, like it's much easier now. Yeah. Yeah. Okay. So I use this acronym a lot when for example, I was helping a really good friend of mine out the other day. She's about to have a baby. Her and her husband don't have any life insurance. And now she's convicted that she really needs it ASAP. Right. And with scenarios like that, they don't always know what the need for life insurance is or how much is needed. Right. And so I use this acronym to help explain to people what the need is. And it's really simple to remember. It's life. You sell life insurance, it's life. So what do these things mean? So life stands for loans. Wow, I immediately spelled loans wrong. I stands for income protection. And if you're wondering how much coverage you need, this is a good way. F stands for funeral expenses or final expenses. So if they already have their funeral covered, there maybe are other final expenses that come after that. And the E stands for education for children if they pass before that time frame / legacy. So then, and that's how I write it. So let's just talk about how much we need. So then I'll just ask, do you have a mortgage in place? How much of the balance is left on that loan? Any outstanding credit card debt, auto loans, student loans? Because whenever we die, that stuff doesn't die with us. Have you ever heard of probate? Yeah, that's what happens during probate. All the assets are held until all debt is paid. That's why stuff gets stuck in probate. Guess what doesn't get stuck in probate? Life insurance. Okay. So loans, let's just assume somebody has a house that they have a $250,000 loan on, and maybe they have $30,000 in credit card debt. So I'm going to put home loan, credit card debt. Maybe they have $20,000 in student loans. Income protection. Let's say it's husband and wife. Husband makes $80,000 a year. Wife makes $50,000. Funeral and final expenses. You have to educate them on this part. How much do you think a funeral actually costs? Do you know? Yeah. So I ask them, have you been through that process recently? Do you know anybody who has been through that process? And most of the time people think they know, and whatever they say, I'll kind of go, yeah, you're on track. The national average right now is between $8,000 to $15,000. That's for a burial, and that's all over the US. But people around here in our area tell me a lot that they spend about $15,000 for a burial and $3,000 to $5,000 for a cremation. So So that's the expectation. Now we're young. With inflation the way it is, I'm just going to assume that 30,000 will get you buried and have a nice party by the time you're actually gone. Is that fair? And everybody says, yeah. And I say it like that because I'm really trying to walk them through it. Okay, and then education or legacy. So this would be, how many children do you have? How much do you think college is going to cost? If the children are young, let's say they're 2 and 3, they have 2 kids. This is a younger couple. They have 2 kids. Their kids are 2 and 3. They were back to back on that. How much do you think college is going to cost in 16 years from now? Dang, I don't really know. That's what people say. Yeah, I don't really know either, but can we just, a healthy assumption, 10 to 15,000 a year on the low end? We're not talking Ivy League, but we're just talking, college. 10 to 15,000. Is that, it's been 7 years since I've been in college. Is that fair? Do you guys think that's a fair number? I'm asking y'all genuinely.
Colton's 2 years ago was 30,000.
Per year?
That was room and board, and it wasn't Ivy League, it was like a private school, but
Okay, so let's say,
figure 15 or 20 probably good.
let's assume 20. Because they can still take out student loans. Hopefully they can get scholarships. We're just going to help them out, not necessarily pay for the whole thing. Let's just say 20,000, 4 years in college, 2 kids. How much does that add up to? 4 times 20, that's 20, 40, 60, 80, 160,000. Thank you. Any legacy you want to leave behind on top of that? That's kind of, so most people will say, I think that's plenty. Okay, I can get down with that. So now it's just a matter of adding this up. 250 plus 50 plus another 50, that's 350. Oh, wait, sorry. This is where that ends. This is 300 right here. So loans is a total of 300,000. That's the need. That's that need of life insurance for those loans. Income protection. Do you guys know what insurance companies say? How much? And they've got a 2 and a 3-year-old. So do you know how much insurance companies recommend people have for income protection? Somebody who doesn't know the answer. Do you know? How much would you think years wise? They times it years wise. So how many years would the insurance company recommend you have your income protected for? Roughly, just if you could guess.
5.
So they recommend 10 to 20 years of income protection when we're at this age, especially because family is young, the adults are young. If something really did happen today or tomorrow, it's not going to be 1 year of income and then everything goes back to normal. They still don't have their other parent there. They still don't have that extra income. And unless they marry for more income, which doesn't want to have to be the reason that they remarry, right? It needs to be 10 to 20 times. Now, don't freak out. Most people don't have that, okay? And it's okay. We can all agree that something's better than nothing, right? So 10 to 20 times income. I'm just gonna do it by 10. So 80 times 10 is 800,000 for the husband. 50 times 10 is 500,000 for the wife. Funeral and final expenses, 30K each, right? And then income or legacy, education, 160,000. So husband, wife, 300, that's 1.1, 1.13, that's 1.29 million. Let's just round up and say 1.3 million is the need for the husband. For the life, 300 plus 500 is 800 plus 30 is 830 plus 160 is 9. It's 1 million roughly. We've created the need for the amount of coverage. Don't freak out. I'm going to say this again. Don't freak out. Most people don't have that much, but we can both agree again, something is better than nothing, right? Now, why do people not normally have that much? Well, it can get expensive. And we also have to remember you've got young kids that you've got a mortgage. You know, if it's not affordable, it doesn't make sense anyway, right? But something is better than nothing. So we're going to make sure that we find something that will qualify you, but also fit your budget. I'm just constantly reiterating that. This is how you find a need. Does that make sense? Is that helpful? All right, so then we go to product selection, right? I'm going to erase all this. Product selection. So Bob and Mary, let's assume that's what their names are. And this is if they haven't already told me what they want. I'm just explaining to y'all. And sometimes I'll do this with friends or agents. I explain the 4 different types of life insurance. And I know he talked about 2 different types earlier, but I'm just going to talk about I'm going to talk about 4. The 4 different types of life insurance are accident, term, universal, and whole. And I don't really go through this whole process with a client who has sent in a lead. Why? Because they really already told me what they wanted. So I don't go through this. But this is a scenario where we're starting from scratch. There is no need, right? Or they may not understand. If you ask somebody, what's your understanding of life insurance? And they say, well, whatever, then you just really tell them there's 2 different types, term and perm. Why? Because these 2 fall in the same category and so do these. So it's term and perm. But I'm going to explain this to y'all for your understanding. Okay, so accident is the cheapest way you can buy insurance. Why? Because it only pays if you die in an accident. Term is the next cheapest way you can buy insurance. Why? Because it's only in place for a certain period of time. Universal life is the next cheapest way to buy life insurance. Why? Because you have to be healthy enough to qualify for term, but it's cheaper than perm, but it's still permanent. And whole life is the most expensive way to buy life insurance. Why do people buy these different types? Accident, really the only reason why people buy accident is because it's budget friendly or it's all they can qualify for. 2 different reasons. Term, why do people buy term? People buy term for mortgage protection, income protection. Why do people only buy term? Well, not only, but most people buy term for those 2 things. Well, because those things are not always going to be in place. We hope that we eventually pay off our mortgage and we hope that our children eventually get off our payroll. So you're not always going to be responsible for those items, right? And so we want to keep our cost of insurance low while our responsibilities are high. Make sense? Universal life insurance. Why do people use that? People use that for tax-free retirement income. People use that for college funds for their kids. People use it for permanent life insurance. People use it for infinite banking, be your own banker, whatever. All those things that are trending right now. These 2 are the hardest to qualify for. So if somebody is not healthy, you can cross these 2 out of the question as an agent, okay? Whole life allows for more wear and tear. Why do people buy whole life insurance? They buy it for final expense products, so final expenses. They buy it for legacy to leave to their grandkids or their kids, or they just buy it for guaranteed permanent coverage. You might be asking, why is whole life the most expensive? Whole life is the most expensive because it's the most guaranteed type of life insurance. That's why it's most expensive. And it also allows for more wear and tear, meaning there can be a couple things that have happened to you and you can still qualify. So, everybody understand those 4 different types? So what are the go-to products for these types of insurance? Well, as you get further in your career, you will be able to better identify which products you like best, and you'll choose those. But the best products for each type are the ones that you can sell. So don't get too worried about which product is best. We're really in a very highly regulated industry, and the cost of insurance does not change much carrier per carrier. So don't worry about if you're doing the right thing by somebody. You're always doing the right thing by somebody, regardless of what you're doing or what carrier you're writing it with. We really like Foresters. We really like Mutual of Omaha. We really like CFG. We really like Aetna, which is CVS. And we really like F&G for IULs. So what can you write with Foresters? All 4 types. Every type of policy that we just went through, except, well, yeah, we can write all 4 types of Foresters. We also can write all 4 types with Mutual of Omaha. So, yeah, Mutual of Omaha is very quick to issue business. So if you like quick, Mutual of Omaha is great. But if somebody is diabetic, Foresters is better. Why? Because they're more liberal when it comes to people with diabetes. Again, you don't have to absorb all this information just in detail. Just you'll absorb it over time. I'm just kind of talking through it. CFG, you can write whole life or term. Those are the only 2 products that they have. Aetna, only whole life. F&G is going to be IUL only. So a lot of times our go-to with people who are healthy are normally these 2, right? Because we have the most options with both of them. If somebody is not healthy, our go-to is Great Western. Why? Because they're easy. They got great customer service. Their pricing is wonderful. There's a lot of reasons we go to Great Western. Whole life only. Does that help knowing where to use what products? And for me, how I make my decisions on what I'm going to write or what I'm going to recommend somebody write is who you can write with, and then who's kind of moving at a quicker pace at the moment. It changes. Foresters right now is taking a little bit longer than normal. F&G, same thing, a little bit longer than normal. Mutual of Omaha is flying things through the door. So, but you don't know that unless you're writing a lot of business. So setting when you're writing Mutual of Omaha or you're writing CFG, you can confidently tell people, or even Great Western, you can confidently tell people, hey, this is going to go through in the next week and a half. That's the expectation. So you can expect to hear from me within the next 2 to 7 business days on whether or not the insurance company has approved you or they have an additional question. With Foresters and with F&G, it's going to take about 2 to 3 weeks before I get any response back. So you can expect to hear from me within 2 to 3 weeks. on if they have any additional questions or anything like that. So, or once you've been approved. So that's kind of the expectation. It is important to set an expectation. If you don't know what the expectation is, set it for longer than you think. It can take 3 weeks to a month, because if anything happens earlier than that, it's just good news. We'd rather have them have that expectation be longer and it happen quicker than the opposite way around, because then they're expecting it to happen quicker than when it really will, and that's where frustration happens. If you don't know, just set the expectation with the client. It could take 3 weeks to a month for me to get a response back, but just know I'm here with you through the whole process. If you have any questions in the meantime before I reach out to you, just reach out to me, but I'll call you with updates as I get them. So don't worry about it. Yeah.
I've heard through some of your stories that people have passed during this process.
Yeah.
If they get approved, will it still cover most of the carriers?
That's a good question. So there's a thing called conditional receipts. So a conditional receipt from a life insurance company means that when the client applies for the coverage, and as long as they've put their banking information, the correct banking information on the application, the insurance company is going to give them conditional coverage. Conditional coverage means as long as the client were to be approved anyway. Like as long as they were to be approved anyway on that product, they have conditional coverage during the underwriting process. And that's another reason to go ahead and get the application submitted today, right? It's another selling point. Foresters, on their Strong Foundation or Smart UL product, Strong Foundation is their non-medical term. Foresters actually gives temporary coverage. So regardless of whether they get approved or not, right? Am I right? They actually have temporary coverage during the underwriting process. That's another reason to get people to apply today. And that is conditional to a few questions that are on the application on whether or not they can qualify for that temporary coverage. You'll be asked those questions on the TIA page, temporary insurance agreement. Yeah. They'll answer those questions there. Another really important thing to know as an agent is, as far as product knowledge goes, is that for the first 2 years on any life insurance policy, it is in that contestable period. You learned about this on your insurance test, but the contestable period just means that within the first 2 years, if the client dies, the insurance company has the right to contest the policy. This is why it is so important that we choose the right product on the front end. If we don't put them into the right plan, it could potentially mean that the family does not get paid. Or if you're not an agent that does business with integrity, it could potentially mean that the beneficiary does not get paid.
Even when they're in immediate coverage?
Yes. Contestable period is different than a waiting period. Great Western has, for their graded product, they have a 2-year waiting period, which means that, yeah, regardless of what happens in that first 2 years, they only are going to get back what they've paid in plus a percentage in the first 2 years. That's a true waiting period. But even on any life insurance policy at all, there's a contestable period. So the contestable period just means the insurance company will go and pull all medical history before they pay that claim. Why do they do that? Well, think about it. The insurance company has to protect themselves from people who are out there to fraud, right? And this is a way that they do that. Because even though they do all that underwriting, even though they send us out there and they trust us to do that field underwriting, and then they also run reports to try to make sure that they're taking on a good risk, even after all of that, there's still stuff that slides through. And so I'll give you an example. I had a customer, this was a lead that I got back in like 2018. And at the time, Barbara my client and her husband, I forget his name, let's just call him Tony. Herman, his name was Herman, Barbara and Herman. Barbara went ahead and bought a policy at that time in 2018. Her husband didn't buy a policy until 2019. And when I was doing my annual review, he died in 2021, 3 months before he was out of the contestable period. And Herman forgot to tell us that he had, it was either kidney or liver, something. He ended up dying from Parkinson's, but he didn't get the Parkinson's until after the policy had been issued, and that's okay. But he had something else in his medical history that showed he had something wrong with it, like he had kidney disease, but Barbara didn't know about it, and he didn't tell me about it. So guess what didn't pay? The life insurance, because he technically lied on the application. And even though it wasn't, the insurance company didn't catch it on the front end with prescription history, it was still inside of his medical history. And so that completely terminated their obligation to pay the full death benefit. So she got back everything that they put in, but that was all she got. So it's really important to make sure we're choosing the right product on the front end. We don't always know. In that scenario, I didn't know. Barbara didn't know. We could have both. We could have never known that was going to happen. You know. Sorry, Katie. It took 9 months to find out the policy wasn't going to get paid. Why? Because the insurance company has to go pull all the medical history, and guess who doesn't work very quickly? Medical offices. So it is what it is. But that is another reason to buy it before you need it and to buy it sooner than later. And to also be very thorough. Like, for example, I'm being recorded, so I got to be careful. Like, if somebody smoked a cigar within the last year, okay, one cigar, does that make them a smoker? No, it doesn't. Okay, and they probably don't tell their doctor that they smoke one cigar a year. But an important question to ask them is, if they disclose that information with you, is, do you disclose this information with your doctor? Because if they do, then, and something happens in the first 2 years, that's important. I don't want you to worry about this stuff too much, because this is a really technical part of the product and knowledge that really is not common, and most people are telling you the truth. But it's important for you to understand so that you have moral authority when you're choosing products for people. It even gives me moral authority to say, listen, like to somebody who has, let's say, like COPD. Somebody who has COPD can get immediate coverage with CVS, but they are graded. They're on a 2-year wait period with everybody else. So sometimes I'll explain to people, like, I'm going to go this route because this company doesn't care about the COPD. And if you died tomorrow, they'd still pay your wife. This company over here is going to put you on a 2-year wait period. They care about it. They don't like COPD. So that's why I'm choosing this one over this one. It lets also people know, like, wow, this person is really looking out for me, because I don't know what's going to happen tomorrow. So I'm always going to try to put you in the best situation that you can possibly be in. And that's part of the field underwriting. That's just what we do out in the field. So anyway, I can go on a tangent, but it's very detailed stuff.
It doesn't. That's not something that you need to,
worry about.
you just need to ask, you need to be thorough with them on the questions.
But I want you to know because it's important. Okay, what other questions do we have about products?
What, an elementary question, but the graded, whenever.
Yes, graded does mean different things on different with different carriers, unfortunately, but most of the time graded means 2-year wait. Yeah. With yeah, we'll just leave it at that. Mhm.
During, they're not completely covered until after the
Right. I mean, they still are fully covered, but not for the death benefit. They're only covered for whatever they've put into the policy at that point, plus the interest rate, which with Great Western, the interest rate is 10%. So it's way better than putting your money in a bank account because at least you're earning 10% on your money if something were to happen tomorrow or 9 months. And regardless, at this point, this is if somebody has kidney dialysis, like renal failure, for example, you can never get anything but a 2-year wait period. So you got to start it sooner than later because we got to get through that 2 years. Yeah.
The Great Western, the ones that I just recently did, those were great, not necessarily graded, I guess.
Yeah,
Or they were,
they're
have a 2-year
graded.
wait period.
They have a 2-year wait. That product, I mean, Great Western just changed their products and that now they have a day one coverage called Great Assurance. Then they also have a plan called Graded, and they also have a plan called Guaranteed Assurance. You did what's called Guaranteed Assurance, which is that true 2-year wait with the 10% interest if something happens to them in the first 2 years. If somebody is a little bit healthier, they can potentially qualify for Great Western's Graded plan, which is a stair stepper. I think in the first year it pays 30% of the death benefit, and second year it's like 50 or 60% of the death benefit. And then by year 3, it's the full death benefit. So it's still a stepping stone. You still got to live through the first 2 years to get the full death benefit, but the benefit that pays out is structured a little different. And how do you learn that? Just go look at the product details. And speaking of that, let's look at some stuff. I'm going to put this down and kind of show y'all how to navigate. See this stuff. Look at the otters, so cute. Oh, y'all can't see it.
Oh, I saw it earlier.
They're so cute. Okay. All right. Oh, actually, let me go to the TFG. Whatever, it's the same thing. This is the same thing as the TFG mobile quotes.
So it's usually,
You want my blanket? That's why I brought it in here.
because they usually have it off, but I think.
I know, it is normally off on the weekends. It's always freezing in here in the office during the week though. Okay, I hope you guys can see that. Let me show you how to go and look at product stuff. So a lot of times if I'm learning, if I want to just double check about a product, so I'm 100% clear, first call somebody. In the beginning, always call somebody. If you're new, always call somebody. Don't only use these, just call somebody so that you know you're getting the real. Okay, so this is, and you can literally find this stuff on just the carrier pages on the ARC. It's not complicated to find this stuff. And if you can't find it on here, you would just log into the carrier website page and find it there. Or if you still can't find it there, you can call the carrier and they'll send this stuff to you directly. That's the order I choose to go in. But like, for example, this is just the highlight sheet. It tells us about each product. The guaranteed assurance is that day one coverage. It tells you the max they can get, the age ranges, blah, 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 all that stuff, all the highlights. Graded plan, it tells us, ooh, we were close, Katie. Yeah, first year, it's 30% of the death benefit. Second year is 70% of the death benefit, and year 3 is 100%. What would make somebody qualify for their graded plan instead of their guaranteed assurance? To be honest with you, I don't really know. Go ask the questions on the application. You'll find out really quickly.
Right there, like you qualify for which one.
I don't try to remember all that stuff. I always just go and read the questions on the application because that's the quickest way to determine whether or not they're going to get it or not. Yeah. And that's another reason to save copies of your applications that you submit, because that's really the only way to, that's the quickest way to pull up applications and read through questions rather than actually open up the e-app. But you have to save copies of your applications anyways for the first 2 years. So please, please, please be doing that. Guaranteed assurance. This is that true, that's that true 2-year waiting period. This is what most of those waiting periods are going to be like, where they really don't pay in the first 2 years except for the return of premium. And other plans that are on the market that we don't sell, like sometimes people will buy whole life or final expense policies through the mail. And all of those policies are going to be 2-year wait period, even if they're healthy. And why is that? Because there was no field underwriter who went and checked health. And the insurance company didn't even ask them any health questions. So they have no idea whether they're healthy or not. So they just automatically put them on a 2-year wait period plan. Most people can get way better coverage than that, most. So if somebody tells you they just bought a policy and they sent it into the mail, ask them to please would go ahead and grab it, or let's call the carrier, because it's always going to be a 2-year wait. And if they can get something better, guess who can give it to them? You can. So yeah, so that's how I go in and try to look at product information if I need it. But really, you're always going to write business with just a few carriers. We, as a whole group, write most business with Foresters. That's really our primary, and Mutual of Omaha. So you're only going to write business with a few carriers. Don't try to make it super complicated and learn all of them, because you're not going to write business with most of them until you start to add either extra products or other things to your toolbox as you get better. Yeah.
Just so everybody will know, the best thing to do is, if we're not able to use any of those products, is to get on the Slack and give your
911. Yeah. If you don't know or can't get a hold of somebody what to write or what they can qualify for, you should call someone first. And then if you can't get a hold of somebody, 911 channel on Slack is the channel that is, I'm in a home, need help right now channel. And if somebody ever asks you, can you help me with a hospital plan? Just so you know what access you have, because again, like what Jonathan said earlier, you are a licensed agent. Please have the moral authority inside of you that says, I know I can help you, but please also know that nobody likes to know it all. No, you do not have to know all the answers. You just have to know where you can find it, or know somebody who knows how to find it. So there's on the TFG mobile quotes page where you have access to all the quoting tools for most of the life products. Down at the very bottom, there's a tab called Product Pocket Guide. This tells you all the products that we actually have access to and that you can sell as long as you're life and health licensed. So you see things on here that are not only life insurance. You see hospital indemnity, you see accident injury, you see cancer treatment, you see disability, dental, critical, long-term care, Medicare. Don't start talking about things you don't know, but if somebody asks you if you can help them with something, that's an opportunity to learn something new and to start to add more things to your toolbox, but you don't need the hammer unless you need the hammer, right? So like you don't have to learn how to use it until you need it. So, but just know that's a quick place that you can go and reference. Yeah, any questions?
Are y'all using that new toolkit?
Yeah, I do have it. What she's referring to is the underwriting tool. It's $15 a month to have, but it is a helpful tool. Do you use it, Katie?
Yeah, multiple conditions, yeah.
Yeah, this has actually helped me make a few sales, to be honest with you, because even after doing this for as long as we've been doing it, I still don't know everything. So this is helpful for sure.
You just gotta make sure you're on the right tab, because right now she's on the final expense tab.
Mhm.
If you're looking for term, you need to make sure you're on the term.
Yeah, up here.
The qualifications.
But you can go in and like say somebody takes carvedilol. So. You start to type in carvedilol. Oh, oops, I was typing it in the wrong place. See, this is the condition. Carvid. It'll pull up and then it's going to ask me, what does this person take it for? Well, they take it for blood pressure that's controlled. They just filled it as of recent. They started taking this medication back in 2014. Boom. Let's say this person also has renal failure. They're on dialysis. I guess I'll put kidney. Renal is kidney. Renal dialysis, they started treatment back in 2016. Oops. Last treatment, 2022. Start of treatment was 2016. Finish. And then I'm going to go to get quote. It's going to tell me everything they can qualify for with the products that I have that I'm contracted with. And you can change this stuff up at the top. But yeah, I would go with Great Western. Why? Because it's going to be the cheapest. Excuse me.
Here again, that customer service.
That's right. And then let's get rid of that dialysis and let's see if it's just blood pressure, what that puts this client. So it's going to tell me all different. See, and it's always, what I really kind of like about this tool as well is it puts the highest commissioned policy or carrier up at the top. Yeah. And actually, if you want to know a secret, it's not really a secret, but I'm going to tell you. You only know if you know what I mean? America final expense is actually higher now. It's 91%, which CVS is like 88, 89%. So yeah, this just gives you options, right? It just tells you in a quicker format.
So searching for multiple
Right,
carriers.
conditions. But this can be confusing as a new agent. So I still recommend that you just call on somebody, and then as you get more of the hang of it, you can use this. And this is also helpful when you're for telesales or for in person, because it helps people, they can see. Let's do term, same thing. So you can see 7. Answer medication. High blood pressure that's controlled. Let's say they are 5'9". Oops. 5'9", 180. Get quote. And it doesn't tell you the quotes, it just tells you the carriers. So anyway, All right. Any more questions on products before we go into schedule?